Welcome back. Now let's move on to the fixed income space where we're joined by Usoro Esia. Now he's the head economic intelligence and strategy at Associated Discount House. It's great to have you on the show with us, Usoro. Now let's talk about the November 13 bond auction. We heard that the federal government will be auctioning 65 billion naira in 3-year and 20-year bonds. So what are your expectations for that auction?
I think it will be largely successful. If you've noticed, from Q1 to Q2 to Q3 and Q4 now, the issuances have started dropping. The guidance in the budget for 2013 was about 584 billion that they're going to raise from domestic debt. As at Q1, we saw that they already did about 50% of that, and going into Q2, they had already done about 60%. So Q3 and Q4, you notice that the volume on offer is a lot less, and that's because the federal government has started mixing its funding mix from the foreign, the euro bond, and reducing the domestic debt because we paid a very high level of interest last year.
Yeah. Now, there was a quiet session in the bond market last week. So how would the bond market react to this?
Well, I think it will be largely subscribed because currently yields are depressed compared to where they were, say, 2-3 weeks ago. And you expect yields to trend towards the previous auction, and that would give you a bit of a premium compared to where bonds are trading in the secondary market as it is now.
Now, there was no OMO auction on Friday, even though many expected that there would be. So what are your expectations for OMO this week?
Well, OMO, it basically depends on the liquidity in the market. Once you see liquidity go above the 350 billion naira level, you definitely know the CBN would come up with OMO auctions.
Liquidity now?
Liquidity is just below that. It's not above that. So, and that was because of the CRR of 74 billion and also funding for our DAS during the week. You saw a bit of a spike. It went up from around 10% levels to 13%. That was like on Wednesday. It eased back after because obviously the 74% debit for the CRR was not what most of the market players expected. They probably expected something on a higher figure. So.
Very quickly, let's talk about the FMDQ OTC platform now. That was, of course, launched last week. So how do you think it will impact the fixed income market? Yeah,
basically, the FMDQ, the terminal I hear they're using is Bloomberg. And you know that most traders globally on the developed markets have access to Bloomberg. So it gives you a digital platform to monitor your transactions, and it should deepen the market. It should make market for some of the less active bonds. And it should also basically create a deeper awareness on our instruments. Yeah,
so thanks for sharing your view with us. We're definitely keeping our eyes on that market to see what happens there. That was, of course, Usoro Esia, head economic intelligence and strategy at Associated Discount House.